In today's video, I'm going to teach you how to use Keepa for online arbitrage. Online arbitrage is simple at its core. You buy a product at a lower price from another website and resell it for more on Amazon. The key is verifying that a product is actually profitable and in demand, and that's where Keepa comes in. Keepa's charts let you see real sales activity, pricing trends, and competition, so you're not guessing. Start by finding a product to evaluate. Browse retail websites and their clearance or discount sections, then copy the exact product name or the UPC so you can search for the same item on Amazon. Make sure the Amazon listing matches your product in brand, size, quantity, and variation. A perfect match is essential for accurate analysis. On the Amazon product page, scroll down to view the Keepa chart. This chart is your dashboard. It shows historical price movements, how often the item sells, and how many sellers are on the listing. Read it methodically so each decision is grounded in data. To assess sales, look at the best sellers rank, the green line. You're looking for frequent, sharp drops over the last 30 to 90 days. Each drop represents a sale event, and more drops typically means stronger demand. A chart with many drops is a good sign. A flat or barely moving line suggests weak sales and higher risk. Next, focus on the buy box, shown as the pink line. Check the 90-day buy box price and note how stable it's been. In most cases, you'll sell at the buy box price, so stability protects your profit. If the price has been trending down, be cautious. Falling prices can erase margins by the time your inventory arrives. Now check whether Amazon itself sells the product. Look for the orange shading that indicates Amazon is in stock. If Amazon is consistently present, it's usually best to avoid the item because they often win the buy box and can undercut third-party sellers. Evaluate competition by reviewing the offer count, which indicates how many sellers are on the listing. A low or stable seller count is generally favorable. If the offer count is climbing, expect price pressure and slower sales as more sellers compete for the buy box. Finally, compare your supplier cost to the current buy box price. Factor in Amazon fees and shipping to estimate your net. Aim for a minimum return on investment of 20 to 30%. If the numbers don't comfortably meet that threshold, move on to a better opportunity. Use this process consistently, and Keepa will help you source smarter and reduce costly mistakes.